What are the three most important financial documents that you need to understand as a business acquisition entrepreneur? In this video, I'll be going over those three documents that are essential for every acquisition entrepreneur to understand. So if you're out going to buy businesses, you need to understand these documents. Now, generally speaking, two of these documents are available for every single business, and one of those documents may or may not be available. But if it is available, then it's fantastic because it's less work for you to do. And if it isn't available, then in good scenarios, in best case scenarios, or best practice, I should say, it is that you develop this document by yourself. Those first document of the three documents is the profit and loss statement, also known as the P&L. So you need to be able to understand a P&L statement of a business. This is a very simple, straightforward document that is produced, especially for corporations, limited companies. It's produced by law. It has to be produced and registered, of course, with Companies House in the UK or the SEC in the US. So the profit and loss statement is available for every single business, and it would be available for any business regardless whether it's registered or not. So even actually a sole trader would be able to come up with a profit and loss statement. Now, that's if they're running a good business, that is. So profit and loss statement, P&L, is very, very important for you to understand. Now, there are four main metrics, or four or five, we'll go over them. Main metrics that you need to understand from the P&L statement. Number one is sales, turnover, of course. That's your top line revenue, what's coming in through the top. And then the next most important, which is arguably one of the most important for business, not for acquisitions per se, is gross profit. So you need to understand, is the business producing a gross profit which is in line with the industry? So depending on your industry, you would have different gross profit margins that are normal in your industry. So number one, you need to know what they are. So whatever your industry is, whatever your business currently operates in, then you need to understand what the gross profit margin is for that. So top line sales and then gross profit. The next important number is operating profit, which is different to EBITDA, which is another number that you need to understand. Actually, EBITDA is how businesses are valued with EBITDA. I've got another video on the channel which talks about how to calculate your business's EBITDA or a business's EBITDA. You can go and watch that. Now, with regards to operating profit, it's different because the operating profit is produced on an accounting P&L. It's produced on an accounting P&L. The EBITDA is not produced on an accounting P&L. So what you get is you get the operating profit, and then you have to add back normally depreciation and amortization to be able to get the EBITDA from the operating profit. From the operating profit, the next most important number is the net profit. So the net profit is, again, always going to be available on a P&L. So if you notice, I said the EBITDA is not available on the P&L, but that's how businesses are valued. So you need to be able to know how to calculate that number from the P&L. So you should be able to understand the P&L statement. Do you understand your business's P&L statement? Are they produced? Yeah. So this is something that you need to ask yourself of your business, and when you're going to acquire businesses, do you understand P&L statements of other businesses? The next most important document is the balance sheet. So the balance sheet is very, very important because a business can have a profit on the P&L, but it could be classified as insolvent on the balance sheet. So I'm not going to go into too much detail about the balance sheet, but generally speaking, you have assets. So you have fixed assets, then you have current assets or operating assets, and then you have your current liabilities and you have your total liabilities. So as long as all of that at the end is a positive number on the balance sheet, and again, you need to be able to read your business's balance sheet and a business's balance sheet to see whether that business is actually solvent. The most important metric that you need to understand from the balance sheet, or the one that I look at when it comes down to business acquisitions, is, are current assets greater than total liabilities when I'm acquiring a business? This is a very important one. So are total current assets greater than total liabilities? Because when you're buying a business, then you have to buy a business which is solvent. And if it isn't, for example, if current assets don't meet total liabilities or exceed total liabilities, then that means that you need to get a discount on the business, right? So if your current assets are not equal to or greater than the total liabilities, that means you need to get a discount on the business. So that's why it's really important to understand the balance sheet of a business when you're acquiring businesses. And there's other factors that go into the balance sheet, which is of course beyond the scope of this video, but on my training that I have with my clients when we go over the calls and everything, it's all detailed there. The next most important one is, in fact, there's actually four. So let's go on to the third one, which is different to the one that you might need to produce yourself if it's not available. Management accounts. So management accounts is a type of report, financial report, which is produced normally on a monthly basis, but in some businesses it can be on a quarterly basis as well. So it's basically mini P&L and balance sheets. So where, for example, in the full accounts, the accounts that are produced to you on a yearly basis or produced as per company regulations on a yearly basis, the management accounts are done every month or every quarter. So any good business would have monthly management accounts which are produced, and you need that. Why? Because by the company regulations, you have to produce the yearly accounts. However, generally speaking, my experience, it takes around about, there could be a 15-month gap. Not it could be about a 15-month gap between the last full accounts date till the current new accounts are produced. Can be that long. I've seen some businesses in really bad cases that have been even longer. But let's not go to the bad cases that automatically you can dismiss those as acquisitions. Actually saying that you don't automatically dismiss them, it all depends. But anyway, that's not the scope of this video. So if you know the management accounts shows you from the last full account statement what's been happening on a monthly or a quarterly basis over time. And entrepreneurs, meaning business owners, sellers we're talking about here, sometimes they don't even know that they have this management account information. Now, if for example a business, because you don't want to be going for crappy small businesses, you have to be going for good decent sized businesses, the business owners could be sending that information to the accountants and the bookkeepers, and they're producing those, but they're not giving them to the business owner because they've never requested it. However, especially today with all of these softwares like Xero and QuickBooks and Free Agent and all of these different types of accounting softwares that you have to use nowadays, it's actually just simple. You go to certain sections within the softwares and you can download the P&L and you can download the balance sheet for monthly management accounts. So it's actually available. Sometimes entrepreneurs don't know about them. And that's, again, you need to understand that. Not necessarily that the person that you're buying the business from needs to understand that. You need to understand that. So the monthly management accounts is another very important document. So the third one, which is technically the fourth one now, but what I said the third in the beginning, is the cash flow statement. So cash flow statements are really important. Just like the balance sheet shows, for example, is the business solvent, the cash flow statement shows you on a month-to-month basis that what's happening in the business with the cash. Because again, you can have a profitable business which is generating a profit, but it's running out of cash, and therefore it can't pay its liabilities. If a business cannot pay its liabilities with cash, then it's a problem, because the business is insolvent and it will get shut down because it can't pay its suppliers, it can't pay tax, it can't pay whatever, it can't pay employees, whatever it may be, it can't pay its liabilities. So cash flow statements are really important for you to understand as a business acquisition entrepreneur. Now, some businesses don't have cash flow statements. Any business which is on the larger side of a small business or a medium-sized business would generally have a cash flow statement. So that's one less thing that you need to do. However, if, for example, a business doesn't have a cash flow statement, it takes a little bit of time. I normally just task this to my finance team now, but in the beginning, first two acquisitions, I did the cash flow statement myself. So it's just saying, all right, generally speaking, from what we understand from the full accounts, from the management accounts, from the balance sheet, this is what kind of happens on a monthly basis. Now, also sales reports. So for example, some businesses, they have sales reports. So that will help you with the cash flow statement as well. The sales reports from, no, we're not talking about the accounts, we're talking about the sales reports from the CRMs that they run. So the, or the POS systems that they run. So that's, or accounts receivable departments, they will have this information. You can request it. Again, this is beyond the scope of this video, but you need to understand at least these four. So if I go over them again, a P&L statement, balance sheet, management accounts, and cash flow statements, you need to understand those. So if you know how to read them, then you can make decisions about whether that's a good business acquisition or not. Because ultimately what you're trying to determine is that, can all of the cash which is generated from a business, what is it profitable? Can it put money in your pocket? And can it put money in your pocket after any debt service or return on investment is paid to investors? Because it's all about DSCR, debt service coverage ratio. Now, even though it says debt service coverage ratio, we're looking at how much needs to be returned back to investors, right? Before you can start drawing something, and there's working capital growth in the business. So that's why all of these documents will help you to make those decisions whether the business itself is a viable acquisition from a financial perspective. Now again, finances is a massive part of an acquisition decision, but it's not everything that you have to undertake or understand. It's operational factors, legal factors, people factors, all of these things that you need to take into consideration. But finances is how you dismiss businesses. So me, what I do now is I will see, generally I can just see the P&L balance sheet. I already made a decision. So I take a look at that. In fact, nowadays, I don't even need to look at the balance sheet straight away to dismiss a business. I just look at the P&L. In fact, I don't even look at the P&L anymore. I look at the sales figures, and then if it passes that, then I look at the rest of the P&L. Otherwise, I don't even look at the P&L, the rest of the P&L. Then I go and look at the balance sheet, then I look at management accounts, then I look at cash flow statement, and then I'm like, all right, you know what? This actually is something that we can work with, which I'm going to make another video about that now. So that's going to be another video for that. Anyway, if you want to find out more about how to acquire businesses and more about business acquisitions, how to grow via acquisition, how to grow your business via acquisition, carry on watching videos on this channel. And I do have a document which can help you on the business buying steps. And that document is available in the description. So go and check it out.